Welcome out to Trading Justice, episode number 208. This is Coach T and one of the hosts of the Trading Justice podcast. Trading Justice is brought to you by Tackle Trading, always. That's our sponsor. It's our partner. We're over there all the time. Coach is over there as well. And, get over on Tackle Trading if you're not a member of our community and get involved in, the daily market recaps and the coaches' shows and the scouting reports and whatnot. TackleTrading.com. This is episode number 208, and we're going to be talking about international currency markets, the Federal Reserve, some elections that are happening in Europe, and really just kind of take a look at the big picture, the macro level of the global economy. If you're a trader, and even if you trade one individual company, right here in your local country, U.S., where I live, wherever it is, you're still having to pay attention to anything that's happening globally. It's just the new world we live in, friends, and frankly, currency is what impacts almost everything out there in the economy. It is the biggest market we have. Tackle Trading Justice. We are really loving what we're doing, building the community here. If you want to try Tackle Trading out for 15 days for free, just put in the promo code JUSTICE15 when you get over there to that website and come and join us and be a part of our communities.
You're in the middle of a battle. The heat of the game. You can't always see exactly what's going on in the playing field. Welcome to the press box, or as we like to call it, the market skyline. Get a bird's eye view of the market's indices, forex, and commodities here in the market skyline.
Matt, come on in here for a bit, and we're going to first start with the news. First off, interesting things happening in Europe right now. I was looking at the newspaper over the weekend, and they're talking about Brexit continuing to push forward. That is becoming much more and more of a reality each and every day and each and every week. They're filing some paperwork to take him out. But really this, move towards nationalism is not reserved to the UK, Matt. I read an article about the Dutch election, which in the last few days, this guy named Geert Wilders, he's a right-wing Freedom Party, politician, but I would say very much on the right side. And he's making a strong push, and people in that country are concerned he might get in, or excited that he may get in. What are you seeing in terms of what's happening in Europe the last few years? Anywhere from the Greece problems, Portugal, Italy, Spain. We've had economic issues, Brexit, the Italian election, now here in the Dutch election. What are you seeing out there with that?
Well, honestly, Tim, I think everybody's frustrated out there right now. I think they're frustrated with what has happened with the debt explosions around the world. And a lot of it is blamed on, basically these ties to other countries. And there's a movement right now to go back to an isolationist type movement. We saw this in the early 20th century as well, when we started like really kind of being isolationists. And America was isolationist for the better part of 50 years, coming really into World War II. And so, you're having a nationalist movement not only with Great Britain, but you're having it all over Europe. You're having it here in America. You're having a nationalist populist movement as well. And so because of that, you're seeing increased risk out there. And quite frankly, I understand the movements. I do. I don't disagree. I don't agree with everything, but I don't disagree with everything there too as well. When you look in the Eurozone, for example, you have 28 now 27 member nations in the Eurozone. They can't even control their own monetary policy. They can't control their own borders. And so, when they're seeing, terrorism, and they're seeing debt explosions, and they're seeing economic stagnation, and everybody's looking for two things. They're looking for someone to blame, and they're also looking for somebody to come in and play Superman. And, that's what we're seeing. We're seeing it across the board, and I don't think this is the end of it. I think this is the beginning. It's going to be very interesting to see where we move from. And the biggest fear I have on it, to be honest with you, Tim, is as nationalism takes over again, does that lead to more war? Because we have seen in history how nationalistic movements can lead to, power struggles, and can lead to increasing conflict and whatnot. And a lot of the people that are blaming globalization, I understand that, but isn't that the next evolution? I don't think it is a wise thing to go back to isolationism. We need each other. We need to learn how to work with one another and from a foreign policy perspective. But that's not what we're doing. You're seeing 4 ballistic missile tests coming out of North Korea in the last 2 weeks. You're seeing the U.S. Put in basically surface-to-air missile defense systems. You're seeing the U.S. and Japan. Japan just launched one of their biggest aircraft carriers to go, test China in the South Chinese Sea. Same thing with America. You're seeing increased in tensions between Russia and the U.S. You're seeing increased in tensions around the Middle East. You're seeing more boots on the ground going into Syria. You're seeing more boots going into the ground in Saudi Arabia and Kuwait, and whatnot. You're seeing increased in tensions between every one of the axis of evil that George Bush would have categorized. The Iran, the North Koreans, the Chinese, the Russians. You're seeing increased in tensions, and I don't see that changing. And that's because we are going more nationalistic around the world. We're blaming the central banks, and they should be blamed. We're also blaming globalization, and whatnot. And what you're really seeing with these nationalistic movements, Tim, is you're seeing a populist movement come back, and they're starting to fight back, and they don't know how to fight back. That's what Brexit was. It was a populist movement fighting back. That's what Trump was. It was a populist movement fighting back, and I can support that. We have absolutely gotten out of hand with debt. We've absolutely gotten out of hand in many capacities with debt to income ratios, and people just they're sick of it, Tim. They're just
There's no
sick of it.
question
But
about it. And
it is leading to increased tensions.
the reality is when we look at the markets and we think about trading, you're forced to examine international economics, the relationship between how oil producing countries ship and move that product around the globe, how currency markets impact it. And so one thing, Matt, actually that I absolutely love about markets and what got me to fall in love with trading from a very early age when I started doing this, and when I got into this, I had gotten out of political science class, right?
Hmm.
Basically, as a poli-sci student, I love talking about history and politics and the relationships. And so it was a natural fit. I think you make a very, very important point. As we move away from global trends, that could create more tension, it could create more problems, and frankly, it could have more risk for markets.
Yeah,
Nationalistic tight border markets are not great for trade, obviously. I mean, that's a pretty common sense statement.
yeah.
We need open trade policies to be able to move the international economy. With the stuff that you're seeing right now, Matt, currency wars, the things that we've seen over the last 10 years, do you think that we're going to make a strong push for a long period of time toward nationalistic kind of mindsets? Or do you think this is short-lived and a reaction that could be a bump in the road?
I think we're at the start, Tim. I really do. I think we're at the start. The start, you really kind of saw the start with Brexit. You've had talk over the last 4 or 5 years about Grexit and the pigs down in, Portugal, Spain, Italy, and Greece. Russia has been nationalist for centuries and they haven't changed. China is extremely nationalist. The America is moving nationalist. Now, our foreign policy has not been nationalistic, but the American populace is starting to pull a little French Revolution nationalist movement. So yeah, I honestly think that we're seeing the beginnings of these things. Now, do I hope we can come back to some semblance of, rationality, that we do need trade partners, that we do need, that globalization is not, the absolute solution, but it is something that has stopped world wars from happening, and whatnot. And I understand globalization can be difficult for some countries. I understand globalization can be difficult for American consumers, but that also allows, cheaper goods, control of inflation, us exporting inflation. And what really globalization truly is it's ensuring that we don't go to war with China, and we don't go to war with Russia, and we don't go to
That's right.
war in Europe, and we tie each other's economies together. It's also known as co-localization, where, if we tie economic systems together, whether it's, a socialistic economic system, a capitalist economic system, a trickle-down economic system, whatever that system is, if we tie those systems together from a globalization perspective, we're not going to kill each other. yeah, we'll spit in each other's face and piss on each other every now and then, but we're not going to kill each other, and that's where globalization is really really important. So I'm a little nervous that we've seen such a quick movement towards nationalist movements. Where we're starting to really shut down trade agreements. We're starting to talk about, just think about it like this, Tim. The whole America First campaign is a nationalist campaign, and that's just getting started.
When you said Coca-Colization, it made me think of that old Coke song about everybody holding hands and loving each other. I
Yeah,
actually
yeah,
looked
yeah.
up the lyrics here, Matt. If paid well, I would sing this for you, but I probably gonna pass.
Well, listen, you've never shied away from singing on the podcast. I don't know
To
why you
teach.
would stop right now. That's all I'm saying. I don't know why you would stop right now.
Well, I just don't know if I have the tune for it. I haven't heard it in so long. It's like, but I got you made me think of that Coca-Colization. It starts with, and anybody can go out there and look it up. I'd like to build the world a home and furnish it with love. Grow apple trees and honey bees and snow white turtle doves. I know that you're not going to like the lyrics if I keep going.
I'm I'm flabbergasted right now that you're actually singing on the pod.
Hey, it's globalization. I'll tell you what, that is the idea, though, right? We all have honeybees, apple trees. We're holding hands. We're trading goods. We live in this open world. Not everybody wants to do that. And one of the things that we're seeing is these strong nationalistic movements. Many of them, I think, are a response, quite frankly, Matt, to the terrorism we've had in the world in the last 20 years. They're like, listen,
Absolutely.
and I get it in Europe. I'm telling you, I
I
mean,
understand.
I get it. They have a mess over there when it comes to domestic terrorism from some of these groups, ISIL, ISIS, people coming into their country. So I do understand it. How many times have we heard the story? There was a bomb in Paris, or there was an attack in Brussels, or wherever it was. It's
Yeah.
getting far too common. So I understand it. It's going to be
Well,
interesting to see what it
especially
does to
in
markets.
Europe, Tim, especially in Europe, because they can't control their own borders the same way that we can control our borders here in the U.S. They have open free trade. Basically, they are globalization over there, and they have to deal with terrorism more than we have to deal with it here. And because of that, there is a stronger nationalistic movement over there. But we are so closely tied politically, economically, militarily to our European partners that we're kind of seeing it from afar and saying, okay, we don't want to go through to the same degree that France has had to go through, or Germany has had to go through, or other that the UK has had to go through. We see that, and it scares us, and understandably so. We don't want to fear for our families. We don't want to fear for our children. We don't want to fear for that. So I understand the movement towards nationalism, but I'm also looking at the markets here, Tim, and the markets don't care. I
They
mean, they
don't.
just don't care. They don't care about North Korea launching 4 ballistic missiles. They don't care about, the increase in tension in the South China Seas or the Middle East, or they just honestly don't care. I mean, Tim, I'm sitting here and I'm with one of my mentor students, Cody Maki, and we're running all these numbers, right? We're running all these numbers. We're researching a whole bunch of covered calls, and we're talking about the markets and P ratios and whatnot. And Tim, the market's lost its mind. I mean,
Hmm.
I'm looking, and I'm not kidding. Now, mind you, I'm in basic materials, and that's the only thing I've really been researching so far.
Hmm.
But after I get done with this research, Tim, I've looked at so far, I've analyzed 15 stocks. Okay, three of them had average fundamentals, one of them had decent fundamentals, and the other fundamentals are god awful. I mean, god awful. Massive negative P ratios, massive fundamentals, and I'm looking at some tech stocks over here. I got about 15 tech stocks, and there's not a good fundamental strong company. Everything's like an average, or it's not very good. And I'm looking at these valuations in the market right now, and I'm saying, okay, so far fundamentally, the market does not support an increase in price from a fundamental perspective, but the market doesn't care. The market doesn't care about the Fed raising interest rates a quarter of a point. It doesn't care right now. And I,
Hmm.
I, I said this last week on the pod. I said it the week before. This reminds me of the late 90s. It reminds me
Sure.
of the late 90s where seemingly everybody around the world just lost their collective minds when
Hmm.
and basically just said, well, we don't care about valuation, we don't care about this, we're going to get into the market. It also reminds me of 2.5 years ago where Chinese farmers were literally walking away from farming in China just to go be professional stock traders, right? And it's like we're starting to see that a little bit in America, where it's like, oh my God, this is going to last forever until it doesn't. I mean, the risk out there around the world, I can't even evaluate the risk out there in the world and look at the market because it just doesn't make sense.
Well, there's the old mindset that the market can stay irrational longer than you can stay solvent. So one of
Oh
the
yeah,
things about waiting for a 5 point reversal, pattern to confirm, and traders know this. Yes, we are up in the stratosphere. Matt, if you put up a heat map for the S&P 500, just put in PE ratio, had to show you all the PE ratios. It's going to be
yeah,
a mess. It's a sea of red. And there's a difference. And if you're out there and you're listening and you're new, let me try to explain something. A company can have a good product and service and still not be a good investment. Okay.
yeah.
For example, there are many companies that I guarantee you love what they do, but buying their stock at the all-time high when they've got a PE ratio in the stratosphere may not be the right plan. And so you
You
have to have
don't
systems to evaluate that, man.
You do not make a long-term successful career in any marketplace, Tim, in any marketplace by buying overinflated, overhyped stocks or real estate at the top of a market cycle. That's
Yeah.
that's not how you make a long-term successful career as an investor. And you look at that heat map, Tim, and me and Cody are looking at that heat map right now, and it is a bloodbath from a
It's a mess.
valuation perspective.
Yeah.
Everything's above 20 except a couple stocks in consumer goods, a couple stocks in services, a couple stocks in healthcare, a couple stocks here and there. Let me give you some numbers just on my research, Tim, and I want to get your take on it. Okay, I'm going to go through the sector P ratio of a couple different sectors out there on average. Okay,
Hmm.
basic materials has a sector PE of 17.42. Okay, your consumer goods has one of 14.75. Financial has one of 15.80. Okay, and then let's go to healthcare, which is one of the most conservative defensive sectors out there. 46.58, Tim. The
Hmm.
average healthcare stock in America has a 46.58 P ratio. It is the most overvalued sector. Technology has a P ratio of 26. Service companies, right? Southwest, JetBlue, McDonald's, D.H. Horton, Disney, GameStop. The industry is 33. So the most overvalued sector in America today is healthcare. When has that
Wow.
ever happened? When is that
Well,
more than technology?
let's
It
give
just
people
doesn't make
some
sense.
context out there as well. Guys, when you hear a PE ratio, it can range from anywhere from a negative number into the hundreds. I mean, it can be
Yeah,
whatever it is. PE stands for price divided by earnings. Now, it's only one metric of valuation. Usually, like when we build our Tackle 25, Matt, we look at sales numbers, sales growth, earnings growth, debt to equity ratios. There's about 17, 20 different components that we put into into the fundamental research. But the
yeah.
PE is the first one.
PE,
Price divided by
tax
earnings.
ratios, those types of things. Yeah, it is certainly the first one we look at as P ratio. It just gives us an understanding of valuation. Is this company fair value for the price that you're paying? And when you're looking at the market, you're saying half of the sectors are completely overvalued right now. The other half, like basic materials, I can't find a fundamentally decent company in basic materials. I can't.
Mhm.
The only one I found was Rig Transocean. It was increasing in decent. ConocoPhillips, British Petroleum, Chevron, all of those companies, Sherwin-Williams, specialty chemical company, they were average. But then let me read you a list of companies that just had god awful fundamentals, right? Air Products, Freeport, Goldcorp, ExxonMobil, Energy Transfer Equity, Phillips 66, Tesoro, Valero, Silver Wheat and Company. All of those had really bad fundamentals. And I'm talking, Tim, when I'm looking at that fundamental, I'm not just talking PE ratio. I'm talking revenue was declining, net incomes were declining, earnings per share were declining, dividends per share were declining, book valuations were declining. Everything was declining. And it's just like, how in the world can I look at the market right now and say this is a buying opportunity, which it is. We have a 23% retracement on the S&P 500. I think it's a strong buying opportunity when everything in the world has lost their damn mind.
Yeah, yeah. And speaking of losing their damn mind, we'll see what the Federal Reserve has to say this week. By the time most of you are listening to the podcast, we're probably going to be a quarter point higher. You know, Matt, 10 years ago when we started, into our first bear market, we've been trading for a couple years. We saw interest rates go all the way down to zero, in 2008 and 9. And they are now ever so slowly starting to trickle back.
0.75, Tim. I
Yeah.
think it's cause for celebration. To be honest with you, we are pretty much going to go up to the 1% range, Tim, and we have not been 1% since 10 years ago, almost 10 years ago, So it's been right around 9.5 years, 1% Fed fund rate for close to a decade. We've had about $10 trillion of new money coming into the system at zero interest rates. So yeah, stock valuations are going to get completely out of control about that. But I want to ask you a question, Tim, because I do not believe the market will bat an eye at a 0.25 increase. I think it's widely expected, over 90%
Well,
probability.
priced in. Yeah, I mean, we already know it.
It's already priced into the
Mhm.
marketplace. The only time the market will move one way or the other is if you see either an increase over the expectation or a decrease under the expectation, right? And that's the same can be said about every economic report out there. It's always built into the market. Whatever that economic report, the expectation, it's already built into the market. The report has to be something that the market doesn't expect. And I just don't see this. I don't see the most dovish, Fed in the history of mankind raising more than a quarter point. But let's say in the statement that they have that they say they're going to raise another 3 times over the next 6 months, right?
Okay.
How do you see the market responding with the overinflated market that we're seeing right now if the Fed comes out and does say that they are going to be more aggressive? Because in the last 2 weeks, Tim, they have been more hawkish in their speeches, right?
Sure.
So how do you see the market who is expecting 3 hikes so far for the entire year, right? This will be
Yeah.
we basically had 3 over the last year and a half, December 15, December 16, and now coming into this one, right? So this will be our fourth one, okay? So let's say we come in and we're going to say, okay, it's more hawkish, whatnot. How do you see the market responding to that?
Well, if they came out very aggressively, with maybe the expectation of three interest rate hikes, I think gold would get hit a lot harder than it has. Gold is
Yeah.
really is kind of floating there. I know it's pulled back recently. Strength early in the year, then weakness. So I think metals would get hit. I know metals bugs out there don't ever love hearing that. They think gold will always go up, and I am a buyer of gold at certain levels and certain conditions. But there's weakness. There's potential weakness in there. So I would be concerned there. I'd be concerned from a commodity standpoint. I think what you'd see, Matt, you'd see the dollar strengthen, right?
Dollar
Uh,
strengthen, commodities weaken, stocks weaken.
and
That's most
stocks,
likely
who
what you'd see.
knows? I think stocks could be a wild card because I'm not sure that the stock market would sell just because the Fed's going to raise. Not on the news alone. Maybe. I think you're right, but I think the commodities market, the metals market, and the currency markets would be most volatile in
Yeah.
the short term. I do know this, and you've done a lot of tracking on this, and you know a lot of the research. Over the long period of time, in a rising interest rate environment, that's not good for stock prices. So you'd have to be
No,
concerned about that through the year.
no. It's got. I've said it for a long time. You got to normalize the interest rate. You can't just raise it a quarter or a point. But if they do become more hawkish, which again, that's kind of my reading of the tea leaves here. If they do become more hawkish, you can expect commodities to go down, stocks to go down, dollar to rise. That's what
Yeah.
you can expect. That will be in the short term. right? I guarantee you, if the market starts selling based on their hawkish mentality, I can guarantee you they're going to send out Bullard, and he's going to say something stupid that is going to be like, that's going to be like, you know, I don't think we're going to raise rates, to be honest with you. I mean, we could do more QE. We could do more. We're going to keep our options open, but we're going to look at the data. But I mean, we'll probably not raise. He'll just come out and say something
All right, I'll give
stupid.
you three choices right now. Okay.
Yeah.
What do you think is the most likely scenario with these Federal Reserve figureheads? They're either evil geniuses that actually know every calculated move they do. They're academics who simply play the part that they've been trained to play through academic, or they're puppets that are being fed through robotic
Mm.
programming exactly what to say and
Well,
what to do. Okay.
mm,
Evil
three,
genius,
evil genius,
academic
academic,
or puppet.
or puppet. It depends on which one you're talking about. Bullard is a puppet. Okay, that guy is a
Janet
puppet.
Yellen.
Janet Yellen is an academic.
Okay.
Yeah,
All
I've
right.
never seen, I've never felt like Janet Yellen was an evil genius. I felt like she's a Ivy League educated banker who worked her way up, and she's an academic. She's making her decisions based on data. I see Janet Yellen. So list out a couple others.
Uh, now you got me thinking. So
Alan
Fisher,
Greenspan. Let's go. Alan Greenspan, evil genius.
right?
Ben Bernanke, academic. Fisher from the Dallas
Stanley.
Fed.
Yeah.
Um, he's not a puppet. He's I would say he's an academic who because he's more conservative doesn't trust the numbers. He's from Dallas. Come on.
So probably the people that they put in the three-piece suit that went to Ivy League schools, they're just simply playing the part. The actual, the evil
Yeah.
geniuses are behind the money somewhere. I gotcha.
That idiot Dudley from the New York Fed, he's a puppet. So you got the idiot Dudley, you got the idiot Bullard. I think
Yeah.
most of the rest are just academics, but those two are the spokesperson. Always, if the markets ever get rattled, they come out there wearing their plunge protection team outfit, and they just say something stupid. And you could go out there and you could look at the Mario Draghis and the Corrados and all those as well. But I think for the most part, they're academics. I think for the most part, they're academics reading their numbers, and some believe the numbers, some don't believe the numbers. But I just don't see how they could make an argument that an increase in the supply of money in such a short time frame has ever been good for any economic models or economic systems. There are some evil geniuses in that bunch, right?
Sure.
Alan Greenspan is the evil genius, right? You can go into kind of the Fed families, right? If you want to go conspiracy theory, the Rothschilds, the people who set up the Fed in the first place, evil geniuses. But for the most part, the people that run the Fed are just academics who are given their orders and they follow their orders.
Absolutely. And I'll tell you, as we look at the overall economy and the markets of where we're at, we're going to have to pay attention to these people in the next year. We have for a long time. But
Mhm.
Matt, I think it's fair to say that Fed events have not been volatility events. They used to be, but they kind of just get built into the expectations. Like every trader kind of
Honestly,
knows what to think.
yeah, honestly, it's like terrorism. Um, and yeah, I just compare terrorism to the Fed.
To the Federal Reserve
Um, and I
interest rate
think it
announcement.
worked.
I got you.
I think it worked. But no, it's they used to be a big deal in the market. You know, it used to be a big deal that the Fed would come out with the beige book. Nobody ever cared. No, probably nobody even looks at the beige book anymore. It used to be a big deal about the Fed minutes. Nobody even cares anymore. It used to be one of the most anticipated, highly sought after economic events, and nobody cares anymore because
Hmm.
they do the same song and dance routine over and over and over and over and over and over, and it's like, okay, we get it, guys. We've heard this before, so let's kind of shy away from that. But no, I think at the end of the day, though, they're going to raise a quarter of a point. I don't think the market's going to care.
It's going to be interesting as we move through it. And by the way, if you're out there and you're a trader, the overall big picture, the market skyline, the thing we do all the time, you always start with this stuff because whether you're trading individual stocks or options or futures, having a good feel for what's happening globally and from a macro level is very, very important. This has been the Market Skyline. We're going to take a short break here in the podcast. We're going to come back, and we're actually going to get into an interview with a new and young student and trader and an ambitious young kid, from what I hear, Matt. Excited to get to know this guy. You're mentoring him this week, yeah?
I am.
Like a slice of pecan pie and a scoop of bluebell. Like tucking your jeans into your boots, spitting Copenhagen and listening to the locusts chirp all night. There are very few things here at the Trading Justice podcast that we like more than a good Texan. Hell, I'm a Texan myself, but that's enough about me. Our featured presentation is an interview with our good friend Cody Maki. Cody is a master's student, a trader, a real estate investor, and much, much more. So it's 1 for the Lone Star State, 2 for the Armadillo, which is a chihuahua with a force field, 3 for the show. Lights, cameras, and action. Boys, we're ready to go. Your featured presentation is brought to you by Tackle Trading. Get in the game and get in the game with Tackle Trading.
Welcome back to the Trading Justice podcast presented by Tackle Trading. I hope you enjoyed those sultry, sexy words from producer Cam. We got a special guest in the house today, Cody Maki. He is a mentor student of mine. He's out here in Salt Lake City, Utah, sitting down with me and doing a lot of research on covered calls. And, we're going to do some on personal gold as well as cash flow condors and delta trading, swing trading and whatnot. So it's a pleasure to have you, Cody. Cody, how you doing today?
Pretty good. How about you guys?
Doing fantastic. Tim, you've mentored quite a bit in your life. I've mentored quite a bit in mine. Tim, what do you think is so special about that mentor relationship?
Well, they're not all special, Matt. So let's start with that. They can be. I think
the honesty on the pod there, Tim.
Well, the reality is, I think that a great and this is where I do a lot more vetting with my students beforehand, because to really make it special, which can be the crown jewel of the education and exactly what everybody wants to get into. Mentorship is critical. To make it special, you have to communicate. You have to trust each other. You have to understand each other with your goals and your expectations. It's like anything, Matt. And I think it really comes down to setting that up, well in advance of what that relationship's going to be. I know for me, and Cody, I'll ask you. I mean, you're a student here. You're sitting there with Matt. For me, I have 3 or 4 things that I want to see from my student. But before I go there, Cody, let me ask you, what are your 3 or 4 things that you bring to a mentorship with your attitude, with your expectations, with your mindset? How are you approaching this whole thing?
Well, first of all, I completely agree that you were saying that with the mentors, it takes a relationship, and that's kind of the mindset that I went to go at it. In order to have a good mentorship, you also have to be a good student. So I approached it with really an open mind and full honesty. Like day one, right before noon, I had already broken out my budget, and I was like, hey, Matt, this is where I stand right now. I didn't want to hide anything. I wanted to be completely open, because by doing that, I know that he has a better opportunity to guide me. And then from there, I gave him a clean slate saying, okay, this is what I do know, and this is what I would like to learn. Things like the cash flow condor and things of that sort that could just improve to help me.
Yeah, sure.
Yeah, TM. Hey, Tim, real quick. You were talking about having a bad mentor, not a bad mentor, but some are not as good as others, right? And I think the best, most successful traders who go through mentoring and whatnot, they take a long-term approach at this. It's like some people, they want to come in here and they want to place 1,000 trades and they want to make $1 million, and they want to turn 1,000 into 10,000, or whatever the case might be. And that's just not the proper attitude to have. That's not the proper mindset to have. The proper mindset to have is exactly what Cody just said. You come in here to build a relationship, right? You and I, we've mentored. I know you've had, between the two of us, we've had about 10 mentors in our lives. And each one of those taught us valuable tools and skill sets in the time frame we went through, but it was about building that relationship with those people, and not for those 3-4 days, but for a very, very long time. And you have to embrace that attitude. You also have to embrace the fact that your mentor knows more than you do and knows where you are and where you need to be. And the more honest you can be with your mentor, the better that we can do. I mean, Tim, yesterday, Cody comes up. We started right about 10 o'clock in the morning. We got done about 6 o'clock. And half of the time, Tim, we were just talking about lots of different things, from politics to earnings announcements, to trends, to trades. We were going through one of the scouting reports, and we were analyzing them and looking at different patterns. We took Cody on a nice little drive down to Provo to kind of show him the Wasatch Front, i.e. to get myself home from Big Cat Steve Andrus. It was just a very, very enjoyable day. And today we came in here and we started about 8:45, 9 o'clock today, and we've just dove into research, right? And we've been now going about 4 hours. And Tim, honestly, we have a list right now. We have a list of about 124 different candidates that we're doing research on covered calls. And the reason we're doing this, the research on the covered call, is because if we can get a list down to, say, 15, 20, even 30, 40 stocks that are really good covered calls with decent fundamentals that aren't completely overextended, then that's a list that we can work off for the foreseeable future, if not for the next 3, 4, 5, 6 years. I remember, the first Tackle 25 we did. That list was the list people used to cash flow on for, 3 or 4 years, right?
Yeah.
And it's just a really good list. I mean, we've been going into comparing sector PEs, industry PEs, stock PEs, talking about how PEs got to be, stock PEs. You can't just look at the stock PE, but you have to look at the stock PE in comparison to its 5-year average, in comparison to what the industry is and what the sector is. So it's a process that we have to go through in evaluating it. And sometimes when you go through that process, it's kind of boring when you're learning how to research and you're learning how to run some numbers, and you want to automate so many things, but there's certain things you can't automate. And for some people, they might be like, "Oh, I don't want to do research. I just want to trade." Well, I'm sorry, guys. Measure twice, cut once. That's
Yeah.
that's what we're doing here.
Well, and there's a very important point right there, is that I think a lot of times with a mentorship, you have to have complete trust in your mentor's process. I will say this: Franco is a loyal listener of the podcast. Cody, you should really connect. And one thing that mentors try to do is they help you guys build your networking. I just mentored a young man I'm very, very impressed with. His name's Frank. Franco. I call him Frank the Tank. But I want you to get to know him. If you're down there in Houston and you're going to be there in 3 days, you guys might as well do a little networking, get together. That's kind of what we do here at Trading Justice. Matt, we're a product of having a community.
Okay.
And there's nothing more valuable than having that.
You were talking about Cody Franco being a longtime loyal listener. I can't even tell Cody stories anymore because he's like, I'm telling a story. He's like, "Oh yeah, I remember you were talking about that on the podcast." I'm like, I haven't talked about that on the podcast for a year. So now all my stories are the second, third time listening, but it's been an amazing experience. Let's talk to Cody about his journey, right? His journey in not only being a trader, but his journey in wanting to be an entrepreneur. I mean, Tim, Cody isn't just doing stock and learning how to invest. He's right now he's flipping a house. Like, he's walked out of my office 2 times taking calls about flipping homes and whatnot. He's flipping a home right now. He's learning. He's doing some network marketing. He's working on his is it your PhD? You're finalizing the last 2 years of your PhD. I mean, Tim, very, 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 very impressive young man. And he's also going to start blogging for Tackle, and excited to see that as well. So I want to step back and let you and him talk just about learning how to be an entrepreneur, embracing that mindset, but with an emphasis on trading. kind of some of the things some valuable lessons he has learned along the way.
Well, the first question I'd ask you here, Cody, is why? I mean, you met Matt probably, some time ago, and you were in a ballroom. You decided to invest in your education, invest in yourself. Why this? What is the vision here?
Well, my why is probably started actually probably when I was young, and just kind of came off of that, and the fact that I always had a desire to travel and go places and be in, and the idea of spending 40 hours in an office just never really appealed to me. So I was trying to think, at a young age, like, okay, how can I not be that person? And naturally, thought is, okay, well, got to become an MD. That's the way to do it, and started going that route and realized that really wasn't quite for me. And then I started kind of looking into various books, and managed to find Robert Kiyosaki's book, Rich Dad Poor Dad, and it opened my eyes. And I wanted to start actually with the markets, because the way I saw it is, no matter whether it's real estate, network marketing, affiliate marketing, the markets and the economics behind knowing that information floods down to all the categories. So I first went to that course with Matt in April of last year. And right when Matt started talking and explaining all these strategies, it was beyond what I had already basically started learning myself from books and trading and anything I could get my hands on, that it made it look like I didn't know anything, which now, even coming from then to now, it's definitely been a journey, and I realize that I still have a lot to learn, even though I've learned so much with you guys. And my why is really just that I see this as the way that I can build a life where I can spend more time with my kids and my future wife than I could any other way.
I love it. Now, a couple things in that regard, I'll tell you. I mean, your mindset is definitely where it needs to be. Building profitability through investing in the markets, it takes time to build that skill set, and the more you kind of understand the money management behind it, that's critical. I do have mandatory reading for any new student, and there's a whole book list. I don't know if you seem like somebody who likes to dig in. Are you participating in the book club, by the way?
I have, actually, and a couple of the books that when you would mention them, and I make sure I try to get through them at least halfway or so before I listen to the podcast. And then others, it was always interesting, like Napoleon Hill. Just even though I'd already read it prior, just being able to listen to it and get another perspective on it, and that I enjoy the book club very much.
Well, very good. So there's one book that is required reading for any of my students, anytime I mentor somebody, and that is Trade Your Way to Financial Freedom by Van Tharp. And the stuff that he talks about in there on expectancy, mindset, those types of things, definitely dig into that one. If you've not completed it, make sure you go back. But I love Mark Douglas's book as well about trading in the zone, those mindset books. So make a commitment to continued, obvious education, growth, the whole thing throughout. What I would focus on right now, you're in your mentorship, is to get yourself a real good plan. It's kind of like, if I could use an analogy, what a mentorship is, it's not the beginning steps in your path, because that started probably years ago when you read Rich Dad Poor Dad, and it continued. So if you're climbing a mountain, you ever heard of this thing called base camp, right?
Yes, absolutely.
So the mentorship is base camp. Okay, it's not the summit, it's not the final destination. It's where you've already made the decision to go on the journey. You get up to the location where you then settle in, you make sure that you're prepared to make that next push to actually summit the mountain, okay? And so as you're sitting there through these 3 days, put together the details in this plan so that as you're moving it forward, you kind of know, okay, this is what I'm doing next, and this is how I'm going to execute it, and this is how I'm going to build my portfolio. And obviously those are things that you and Matt are working on this week. I'll tell you, in fact, instead of telling you, I'll do a better one. I'll ask you, as you're moving this forward, how will you define success? How will you define that you've made it, that you've achieved it? You have this vision. What are your markers for success?
Well, it's funny you asked that. I actually I want to define success as a set number or monetary value or a certain situation. Well, it is a situation, but not in the set of, okay, once I get here, then I'll be successful. Success is a moving target, and we should always be trying to grow. I actually I like the mindset of success is the constant personal growth of trying to move forward and achieve something else and try to achieve something new. If you're not growing, you're dying. And that's one of the reasons that I try to learn in many different facets. And so I don't look at success as necessarily as okay, once I have X, Y, and Z, then I'm successful, I'm good, I can chill out. I see success as a constant drive towards bettering yourself. And in that breath, I can see myself as a successful person in my own life because I know that I'm on a path that I want to be and I'm pushing forward.
There's no question about it. And how old did you say you were again, Cody?
I turned 26 in May.
You say future wife. Does that mean you have a girlfriend? Have you proposed? Or
I have proposed. We're getting married in July 22nd.
Congratulations, young man.
Thank you.
Well, so you're 26. You're getting married. I got married when I was 26. This was exactly when I started trading. So you're at the beginning phases, almost exactly like Matt and I were, about same age, same time of our life, and all this. I'm going to give you some advice. If you want it, do you want some advice?
Absolutely.
Okay. Number one, always approach life with an abundance mindset. It sounds like you have built that. You've been trained, Napoleon Hill, Robert Kiyosaki, many of these great books, many of these great authors, these gurus. You have that. Always approach it that way. Number two, realize that you could lose every penny. If you have proper mindset and training, you're never going to be poor. Okay, poor to me, poor is a mindset. You can be broke. If you're a great investor, you'll find ways to get money. If you're an entrepreneur, you'll find ways to make more money. And don't get concerned about that part of it. Things tend to really come when we have this open attitude towards making money. Number three, the growth component of what we do in investing. I'm glad to hear you're doing real estate flips. I'm glad to hear you're doing other things. You're continuing education. Really, if you learn the language of money, and that's really what trading is, the financial markets are the biggest industry in the world for a reason. You learn the language of money properly, it will open doors for you in ways that you can never really understand until you get to those summits. And you're right. I mean, after a year, you've probably learned a lot. It will be incredible when you start having these light bulb moments over the next 2, 3, 4 years. And when it comes down to the actual trading of it, always, always, always follow your rules. Okay. There's so many mistakes we can make. There's so many great things we can do. The one thing we can't break, the one thing is money management rules, risk control. Risk is not usually a fun conversation, but it's a critical one because if you can keep the risk down, the potential rewards are there. And the ROI over the course of building it out, it's incredible. So keep the right attitude, young man.
Thank you. Definitely appreciate that advice.
Yeah. So as you're looking at this here, what is the strategy that you want to work on the most? What are you guys focusing on there while you're building out your mentorship?
Well, as of right now, we started with the portfolio design of splitting it up between some cash flow, some growth, and some speculation, and looking at where I am and what I should be doing. And one of the biggest things that I'm happy to focus on is the simple strategy of a covered call, because the power behind a covered call and knowing how to properly manage it and not simply just click the buttons to make it go, but really know what to do when the strike's coming up or whether you should roll it or come out of the trade that's really a main strategy that I really do want to know. And the ideas and the concepts behind the covered call are the same basics to more advanced strategies. So I'd be very happy just to walk away knowing, twice, 3 times as much about the covered call as I did when I came in.
I love it. You don't have to do everything. I firmly believe, and I want you to take some notes here. And if you're out there listening to the podcast, if you're driving, don't take these notes. I'll have Cam put them in the show notes. But I firmly believe you need to have 3 different types of strategies. And the first one is a cash flow strategy. So I love hearing that you're working on covered calls. Now, I would also recommend a few of the other ones, but you keep it simple. If you perfected covered calls, you would have a good strategy that has been proven, tried, and tested in the market for decades. That is a great way to invest, and is a good cash flow technique. It's conservative, but I love new traders starting with that. The covered call. I will then tell you as you get better and into the more advanced stuff, that iron condor, Cody, is a fantastic technique as well, especially for somebody who's going after your PhD and doing real estate investing. It's a good cash flow technique. So it's got to be done with rules. It's an advanced technique. You and Matt will probably work on that, I'm guessing, today or tomorrow. But then I'll tell you, there's a couple other things. The next one is you need to have some way to approach speculation. And that could be through volatility. It could be through day trading Forex or futures. You don't always get to it, in your first, go around when you're learning the markets. But at some point in your career, you're going to want to be able to go after the market when it's opportune with leverage, right? And there's a lot of different ways to do it. In fact, last week's podcast, we talked about day trading Forex, and then that's one viable technique. But then the growth component is the third area, so cash flow, speculation, and growth. But remember, growth is not just in your trading account. Your real estate is growth. Buying metals is growth. Have you bought any silver coins, gold coins yet?
I have. I own 30 grams of silver. I was actually quite excited for the first time to hold those 3 silver bars in my hand. And y'all talked about before, hold a silver bar in one hand, a $20 bill in the other, which one feels more valuable. And those silver bars, they're hard to even think about parting with.
That's right. Well, I had a student post on Facebook the other day. He got some silver coins, really cool. And then he also got a silver bullet. He said he couldn't pass up the silver bullet. So I guess you got to go after those vampires at some point.
Yeah, you got to be prepared. I believe it's werewolves that are silver, isn't it?
Oh, I don't know. I'll have to look into the old folklore.
You guys are geeking out way too much.
Yeah. Well, I'll tell you, Matt, very impressive young man. I like what you're doing, Cody. Maybe one last question. If somebody out there is brand new, because you're a year into this now, you're at your mentorship. So somebody just joined our community, excuse me, maybe within the last 2 months. What advice would you give those people?
I would say understand that it's a process and it doesn't happen overnight. The old metaphor of Rome wasn't built in a day. If you want to build a lasting life that's truly to your dreams, and then it's not going to happen in a week. It didn't take a week to put yourself in certain situations. It's not going to take a week to get out. Trading is never a happen overnight, get rich quick scheme. And when people try to go at it like that, they typically come away disappointed.
Mm-hmm. Yeah. Trust the process, Matt. By the way, Matt, did you see that? Who's the guy for the Philadelphia 76ers that says that now? Joel Embiid? Is that his name?
I don't.
He's got T-shirts. I've been saying trust the process for years. Okay, you've been saying it. Yeah,
you got it from me, and I stole it from some coach. And Bo Moody writes it on the board. TTP, baby. Trust the process. No,
I love it. You should check it out.
Yeah, if I might have to put a patent in out there. Might need to go get that trademark before people start stealing it. But no, it is a process, and you have to trust the process. You have to trust that you're with the right people in the right environment, with the right team that care about you, and that will help build you to something bigger and better than who we are as individuals. You and I needed it, Tim. Obviously, other people need it as well, and trust it. Trust that process. It doesn't. Like Tim, I still remember we were doing a co-mentoring one time where I had a student in, you had a student in, and this is back in the day when I would do 10 straight hours of just running numbers, right? And scanning, running numbers, researching, whatnot, and you every now and then, about every hour and a half, 2 hours, you get up, you go for a 15-minute walk with your students, and you would be like, Matt, you want to come? You want to come? I'm like, no, I want to do some research, And but no, it's everybody's got their different way of going about it. But what that taught me, Tim, is that it doesn't matter if you run a million numbers in one day. It's about the journey. It's about where you're at in a year from now. It's about where you're at in 2 years from now. It's about surrounding yourself with people that you trust, you respect, and you want to be a part of that team. And we're a day and a half into this. I feel like Cody's a long lost cousin of the Justice lineage, and he's welcome to be a part of that. So I'm glad I'm the one that's mentoring. I'm the one that I feel fortunate mentoring Cody, and it's been one of the easier mentorships I've done because Cody has the right attitude, he has the right mentality. He's doing this for the long haul, and and most importantly, he's doing it for the right reasons. It's not about getting out there and getting rich. You heard him say this. It's not about get rich quick. It's about, putting my family, my trajectory, my future bride, my future children, my future, all of this in the right way. And if I have to take a few steps here and a few steps there, I know that in 5 years I'm going to be in a very, very, very good situation. And he came to, he's 26 years old today. Obviously, he's done a lot of impressive things. By the way, we've geeked out a few times too. It's been very, very nice. But he comes to me and he says, Matt, I want to be financially independent by the age of 30. And I said, okay, you got 4 years to do that. This is how we're going to do it. We're going to do it through cash flow strategies. We're not going to take aggressive risk. We're not going to. We'll take some moments in aggressive, but for the most part, we're going to design that portfolio to where it's high probability, high with canned ROIs. And when you're looking at covered calls, like I literally we went to Buffalo Wild Wings yesterday for lunch, and we just sat there and took out some napkins and started drawing portfolio designs, right? I actually put it on Facebook. And when I'm looking at that portfolio, starting where he wanted, we were looking at a certain percent allocation in covered calls, right? Compound those gains back into the market. Looking at personal gold, we're going to start with 1 or 2 contracts per commodity ETF, but we're tailoring the system of personal gold to Cody to where he doesn't want to take ownership. Personal gold is a system where if you have to, you take ownership of the commodity and then you start writing covered calls. But with Cody's portfolio, it's okay, that doesn't make sense where we're at. And so that wouldn't be the most effective and the most efficient. So, later on today, we're going to start, after we get done with covered calls, we're going to start back testing personal gold to fit with what he wants to do. And so, last night, Tim, I asked him, I said, Cody, he before I dropped him off at his hotel, he says, do you have any homework for me tonight? And I said, nah, just relax. I said, no, Cody, do me one favor. I want you to go back test the last 20 years per month price movement in gold, and just to see kind of where the ranges are. And he comes in here today and he says, hey, so you want to know the highest month? And he looks at me and goes, you already know that, don't you? I said, yeah, what do you think, Cody? I wanted him to get that experience of how to kind of go do it themselves, because in mentoring as well, it's not just about us, the mentor, telling you what to do. It's about teaching you how to kind of go about it, the research, the analysis. And if you can teach people to do that, they're going to be a part of your team for the rest of your life because they're going to help you build things in the future. And so we're going to tailor personal gold to lower deltas, lower ROI, higher probability, so he doesn't have to do any management, because that's where mistakes live, is in management. And when you're doing cash flow systems, you're managing 2 things. You're managing net liquidation and you're managing the strike price. And if you sell a higher delta, you're going to have more management on the strike price than if you sell a lower delta. So we made modifications to that. We're also going to have to make modifications to cash flow condors to ensure that, instead of a 60-day rotating number where we sell every 60 days, we sell every 30 days and another 60-day condor, we're going to have to be a little bit more aggressive with condors in, just working off 30-day numbers until we get to the point where, we can do multiple different contracts in multiple different months, but the margin requirements are a little high for that. So, we're taking these systems, and that's what mentoring is, guys. It's taking systems of trading, rules-based, back-tested models of trading, and tailoring them to the individual. And that takes some time. And Tim, in an hour, you and I could sit down with a new trader and design their portfolio and actually go and allocate it, right? But that's not what mentoring is about. It's not about me designing, clicking buttons, and then just saying, okay, here you go. Here's a cookie cutter portfolio. Now you just gotta, manage it for the next 30 days. Well, in 30 days, then what? Right? You got to teach them how to do it and give them the reasons behind that. And it's been a very, 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 very enjoyable time so far. So I'm looking forward to the next day and a half, and we'll be with Cody. And if those of you out there listening to the podcast want to look into what mentoring really is about, go over there, go over to the clubhouse, post a question in the clubhouse. We'll be more than happy to answer it. You've been listening to Trading Justice, presented by Tackle Train. We'll be right back after these messages.
You've been listening to the Trading Justice podcast, proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.
Okay, welcome back to the Trading Justice podcast, and it's where we turn the music down low. We light up an incense stick, Matt, and we kind of chill out, right? Is that the attitude that you want to bring to the podcast? I never understood incense sticks, by the way. I always thought they were kind of wasted. But
don't tell my wife that.
Yeah, she still likes them? Oh, yeah, some people do. All right, so we're going to do two things right now. First thing we're going to do is what we call the Coach's Mailbag, where we answer questions that you guys have posted in our clubhouse. Send us on Twitter, or anyway, you can send us an email, whatever it is that is best for you. The first one from Terry Newsom. And Terry is one of our veteran students from down in Phoenix, Arizona, Matt. I met him about a year and a half ago. He did mentorship with my mentor, Micah Brooks, who we've also had on the podcast. And Terry asked a question that I think we're going to get more and more. He says, I'm thinking of switching trading platforms from Toss, Thinkorswim, to Tastyworks, looking for feedback. Matt, give him feedback.
Well, Toss is still by far the best software in the business. And that's my opinion, but I do believe they're still the best software in the business. But they're increasingly becoming difficult to work with in terms of, because they're becoming more traditional. Toss is becoming more TD Ameritrade, and that's not a good thing for Toss. That's not a good thing for the future of Thinkorswim. That's not a good thing for those types of situations. And in the last few years, I've seen an increasingly difficult time in getting them to lower commissions, but even more so, getting them to increase tier status. In terms of level 2, level 3 trading authority, getting the ability to do credit spreads and condors and whatnot. And they're doing this whole thing about, well, you just got to go take these classes, and it's just marketing. That's all it is. It's just marketing. And they'll sit there and say, well, we want to make sure that you're comfortable selling naked puts or credit spreads. A credit spread is by far less risk than, with a high probability, than even buying a stock. So don't try to kid anybody, right? And, we've had these conversations with reps on the trade desk at Toss many times. I mean, Tim, we've had thousands of clients over at Toss for years now. And we've had these conversations with them. So when you call them up and they don't know you've had all these conversations with them over the years, they try to start basically selling you, right? And you're like, okay, hold on, listen. I've had this conversation before. It's like a broken record. I've had this conversation before. You're going to say this. I know you can do this, right? So as I called Thinkorswim on Cody's behalf today, or TD Ameritrade, trying to get a higher tier status and lowered commissions, and just basically around the block, just blah 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 blah. And I said, listen, I know you can go to this amount per contract, so just do it. And finally, he just did it. And he's like, well, we need you to apply for tier status. We have applied. You're putting it through the ringer and giving us the runaround, and just do it. Just do it, or we're going to go to a different broker. And Tim, I'm not kidding. We went over there, signed up an account with Tastyworks, and had the account open up, and no hassle, not in any capacity.
It's unfortunate, but it is what it is. It's their business model. It's their choice. And by the way, I don't have any affiliation with any of these companies, but I will tell you this. If you ask me today, because I trade at TD Ameritrade, but if you ask me today, I'd probably say Tastyworks, Matt. And I may move to Tastyworks, quite frankly, because I've had the conversation with my students on the phone with people at TD Ameritrade where they flat out lie to me saying they
Yep.
can't move the commission. And I know they've done it thousands of times
Thousands of times.
with the same students. I have been on the phone with them when they've done it. But what's happened is they've changed their business models. They've made it more about these regional branches. And so they assign you some rep out
They're
in the middle
assigned
of
to a rep in Omaha who gets the commission, and it's all about money. It's all about money. And when a company becomes all about money to the consumer, they lose customer service. They lose why we went to toss in the first place. And I have an account over at Tasty, and I'm just kind of playing around getting to know their software. And Tasty is an excellent brand. They care about their clients. We've been working with Tasty in some capacities, but I'm thinking, I think we're all on the same line here. We're looking. I think everybody right now with Thinkorswim that we know still trades with Thinkorswim because they still have the best software. But almost everybody that I've been talking to is getting frustrated with how TD Ameritrade they're becoming.
Mm-hmm. Yeah. Yeah. All right. Moving on. So I think, Terry, you'll hear from us as we go. I'm sure we'll have
Terry.
much more to say on the
Patience.
topic.
Yep.
Another one from Drew here. What is the smallest amount anyone has started off trading with? Any particular strategy you would recommend to a beginner with low cash?
Well, obviously
Matt?
the low capital type trade. I would say less than $2,000. You should look into starting forex. Is what I would say. You can open
I
up a
would agree.
forex. You can
Forex
open up
for
a forex account.
speculation.
Yep, you can open up a forex account for very little. You can trade micro lots, nano lots, very little position size, or you can open up a brokerage account and start trading low dollar speculation in terms of delta trades.
Here's the problem is if you have low capital, you probably also have low experience, I'm guessing. And so obviously you're not supposed to be in the market until you get a strategy down. So education first, Drew, is what I would tell you. Same thing I tell everybody all the time. You got to learn how to do it right because the account will grow. You'll have more access to capital. You can deposit more over time. I wouldn't worry about how much. I would worry about doing it right. If I was starting with a small account, Matt, Forex is great for speculation and day trading. And then just a simple spread, debit spread, bull call, bear put. But those are intermediate strategies. You have to learn those. So there's a lot to do. But Drew, what I'd tell you is just trust the process and learn how to trade. Get into Master Trader, focus on charting, and those components can kind of backfill in.
Yeah.
Last one here, Matt, from the Coach's Mailbag. It is always good to hope for the best, but to prepare for the worst. Since we're in a bull market, can we learn and prepare for bear markets? From one of our best members out there, Adi Puplampu. And what would you say to Adi there? How do we prep for a bear market?
How do you prep for a bear market? Surviving the doomsday. Well, actually, we at Tackle, we are in the middle of creating a nice little pamphlet that's called what is it called? It's
Bear Market Survival Guide.
The survival guide. Not everything goes down in a bear market, right? You have an 80-20 correlation. 20% of stocks will go up or sideways. 80% of stocks will decline in some capacity. So number one, you got to start thinking about, okay, what type of investments right now, if I'm looking to get into something, has a tendency to perform decent in a rising interest rate environment and potentially bear markets. Number two, and you can look at lots of different things from guns to ammo to food to gaming to land to some defensive sectors like utilities. I would say healthcare, but healthcare is ridiculously overvalued right now. So you could look at certain stocks that typically we need in a variety of different capacities, regardless of what the economy is doing, right? You can look at it also stocks that are cheaper stocks. And what I mean by that is they sell a cheaper good. In a recession, it's not as scary from an economic numbers perspective than it is a price action perspective. The price action goes crazy, but from an economics perspective, it's just a dip in the economy. So we still spend money, we still buy things, we still live our lives. We just go cheap. Instead of going to Macy's and Dillard's, we'll go to Ross Stores and TJ Maxx. Instead of going to shop at Whole Foods, we'll shop at Walmart, right? So look for cheap in that capacity. And there's other safe haven currencies. There are other safe haven commodities out there as well. But for the most part, you can look to learning the covered call, a great cash flow type system, but it also lowers cost on a monthly basis. So you're hedging the downside with the covered call. And you can also look at adding a protective put option to an investment, which will protect the equity value while you also cash flow on it. So there's a lot of different things, but as we get the survival guide out there, I'm sure we'll be talking more about it.
Love it. And if you ever have a question you want us to answer on the podcast, we hand select them, but we're always looking for more. Go into the clubhouse at Tackle Trading and post it as a question. You can also tweet at Trading Justice or at Tackle Trading. You can also send us a message on Facebook, send up a smoke signal, however you can get a hold of us, do it, and we'll get you in the next version of our coach's mailbag. Now, Matt, we're going to go right into our last segment here, our Clown of the Week, where we nominate one clown that we put out there for voting. We talk about why, and then we vote on it, and they get the clown shoes. Then we kind of tease them on Twitter and whatnot. But we got 3 of them here. Cam, you're up first. Cam, do you got your mic today, or do you want me to read it?
I do have my mic. Can y'all hear me?
How you doing, young man?
Incredible. Happy to be a part of this today.
Cam, I have had a few comments recently from some of our loyal listeners and members saying they love your drops on the podcast. So keep up the good work, young man.
Yes, sir. My clown nominee, Sean Spicer, or as I like to call him, Mr. Spicy himself. During a White House press briefing, Press Secretary Sean Spicer says, the greatest illustration of the difference between Obamacare and President Trump's American Health Care Act is size. Now, when he had the visual, he had the 2 bills laying on the table next to him, and he pointed to Obama's and said, "This is government, and this one is not." And I just think that he probably ate those words because he needs to realize he is government now. So my Clown of the Week nominee, Mr. Spicy.
Mr. Spicy.
Listen, I love a good visual, Matt. I love a good prop.
Yeah.
And I do like the name Mr. Spicy. Matt, what do you think of Spicer here?
I think Mr. Spicy was the producer for the Spice Girls. And the visual I was thinking when he says, "Look at the size," I just couldn't help but think of him holding up his hands. Look at the size, and then a picture of Trump. Look at these hands, right? Now, Spicer has an impossible task. He does. He has an impossible task. And he's probably doing his best, but I just don't see him lasting very long in that role. He's almost like he's sent out there, neck out there. He's in the guillotine all the time. Him and Kellyanne Conway. I try not to feel too bad for those two, but yeah, that's a good one. I was telling Cody, you could probably nominate Spicer pretty much every week is what you could. The analogies that are being thrown out there from every side of the equation on healthcare right now is ridiculous. I've heard some of the dumbest Democratic responses to analogy this, to analogy that. We'll compare this to compare that. It's healthcare in general is out of control in every capacity. And I don't see a quick fix on this in any capacity. So, Tim,
I will say this: somebody had to be the press secretary to come out and release a statement after Chipotle put E. coli in their burritos, right? It kind of feels like Sean Spicer's job right now. He's got to come out and explain, exactly what's happening. Can't imagine it's an easy gig to push through. I like the nomination here, Cam. Matt, you got one? You want me to go?
Yeah, Tim, you go first.
All right, so, and this is great having, 2 young men from Texas there. I found a really interesting one. It was a satirical Texas bill. So what happened, Matt, is there's this lawmaker down in Texas who decided to put out a bill in their house that would make it a finable offense if they found a man masturbating. And I'll just have to read this because I can't do it justice without reading it. If you're a Texas cowboy who wants to rope the pony, hope you've got a C note in that 10-gallon hat. Democratic Rep Jessica Farr has been a vocal opponent of what she says are anti-women's measures, and she recently introduced in the Lone Star State, including forcing women to wait 24 hours after a consult before getting abortion, on and on and on. So essentially, Matt, she was railing against these anti-women's measures that she sees. And so she put up this bill, House Bill 4260, a man's right to act, which would first fine men $100 for unregulated masturbatory emissions. Okay.
Wow.
First of all. And she would make men seek an elective vasectomy to ask for, also would make men seeking an elective vasectomy, a colonoscopy, or a Viagra prescription wait 24 hours to go for over an informational packet first with their physicians. So essentially she's saying the 24-hour rule they make young women go through, we're going to make men do that for their Viagra, for a colonoscopy, a vasectomy, so on and so forth. I love this. I don't know who the clown is here, but I mean, I love this one. What's your first reaction?
I don't know what to say. Anytime you put, what was it, masturbatorial? Was that what
emissions?
Oh my goodness. Oh my goodness. Masturbatorial emissions. Is that the political version of ejaculation? Is that what that is?
I think so. I think it's the legal now term. $100, yeah.
Oh my goodness, that is insane. That is insane. I honestly do not know what to say to that. That's
like many insane stories, we got to figure out who the clown is.
All right,
okay, is the clown the lady? Is for putting out a bill and kind of mocking the system. There's so Jessica Farrar is up there. Is the clown the House of Representatives there in Texas and the men who are introducing all these anti-women's measures that she's going after?
There's some clown there.
There could be some clown there. I don't know.
This entire thing is clown-worthy. This entire thing is clown-worthy. From the bill to the reason the bill was put out there, that's entire clown-worthy. Okay, the masturbatorial emissions. That phrase is the clown of the week. That phrase shows you so much that is wrong with politics and political correctness and all that bullshit. So yeah, that's definitely up there. And then I got two quick nominees, Tim. I got one. There's a little boy, okay, and this little boy, he's from Wisconsin. His sister is a high school basketball player, and they had just won their version of the state title. She is from Appleton North Lightning, and they defeated De Pere 49-34. And as they're celebrating on the court, the sister, the basketball player, kind of turns around and goes to pick up her brother, who's just a toddler, and he's running on the court to give the sister a hug. And the athletic director for this school would not allow the little boy to hug the sister. And there's actually a video of it, Tim, online, where the little boy's just jumping up and down, and he's so excited. And the athletic director stops the little boy and then goes over to the player and explains, "Well, no, you can't hug your little brother." That the video's really kind of sad when you see this little kid so excited, and the athletic director comes up and says, "No, you can't do that." So that the athletic director gets a clown for ruining what would be a very, very special family moment, because the video was taken by, I believe, the mother and the father, and it's just it's kind of insane. The second one.
Well, let me say something to this one real quick. Okay, so I used to travel. I talk about it quite often, and umpire sports, ref basketball, go to these small schools. Yeah. I can tell you the ADs in these schools, they take on many different personalities. Number one, they tend to be really, really anal about getting on the floor and this and that, and it almost like, come on, guys.
I get it. It's after the game, Tim, and honestly, it wasn't even a ref or an ump, or it wasn't any of that. It was just the athletic director of this local school, this small school, just breaking up his family.
Play devil's advocate though, okay? So you got a young kid running onto the floor, and it's a and maybe the AD just didn't know. It's like, this little kid can't be out here. He's going to get run over, and we got all this. I don't know. I get it, though. It's obviously not something you want to restrict. Sports are supposed to be fun and all that kind of stuff. But, man, those ADs, they do not have necessarily an easy job, but they can take it a little bit too far.
And that's what this was. So she's getting the nominee for ruining a family moment after a really good sports moment. The other one, though, it was from the University of Central Arkansas. Okay, so there was this guy. Yeah, Tim hears Arkansas. He's like, oh no. There's this guy. He gets pulled over for driving under the influence, right? So he's kind of swerving the car. The police, you can see the dash cam on the board of the police car pulling this car over, and so he pulls out the guy to start giving him the sobriety test, right? And so the guy, when he's outside of his car doing sobriety tests, he pulls out, and I'm not kidding, he pulls out these like they look like bowling pins, right? He pulls out these bowling pins and he starts juggling in front of the dash cam to prove he was not driving under the influence. I mean, seriously, could be a clown, like a legit clown. But I don't think, I've been inebriated a few times in my life. I couldn't juggle. This guy is literally juggling. So I think he's going to get the clown nominee as well. So we got Cam with Spicer, Mr. Spicy. We got the masturbatorial emission test, right? Come to your local DMV. You have the officer pulling over the driver, who then gets a juggling show to prove that he wasn't driving under the influence. And you have the Wisconsin athletic director at a local high school stopping a family moment. All clown worthy, I would say. Cam, let's get your vote first.
I like all of the nominees this week.
Good nominees.
I was thinking how bankrupt I'd be if that law went into effect when I was growing up in Texas. But no, I'm gonna stick with Spicy on this one. I found a couple cool pictures I could post on Twitter of him already, so maybe I'm a little ahead of myself, but I'm gonna stick with Spicy.
All right, Spicy gets the nominee. Gets one vote. Tim.
First of all, I love the Texas bill thing, but I just don't think I don't know if it's clown worthy. I just thought it was funny, and I actually think
masturbatorial emissions is clown worthy.
That's just good copywriting, man. I mean, that's just smart marketing. She is making headlines.
She has a good speechwriter.
Absolutely.
Yeah.
I guess, but I do love going after, that the mindset and the concept that, we should treat a woman's body different than a man's body and all this. I applaud that woman for being creative with her lawmaking. I don't like that she's using the floor for it, but it is what it is. I'm going to go with probably the drunk guy juggling the bowling pins. And I haven't seen the video.
I'll send you the link. So, I mean, it's the clown of the week, and he's juggling, right? Right?
First of all, that's very clown appropriate.
That is extremely clown appropriate. So Tim's going with the clown. I am going to start a hashtag masturbatorial emission test for everybody 18 or younger. If you have I'm starting that on Twitter today. But I got to go with the juggler too. I got to go with the juggler. I think it was a very creative way to say I'm not drunk, but it was cool that it got on tape. So we'll definitely post the link over there in the clubhouse and whatnot. But young man, University of Central Arkansas student. I don't even know his name. We'll have to look into his name there, Cam. You are the Trading Justice literal clown of the week. So welcome to that prestigious honor that has been bestowed upon so many great qualified candidates in the past So the juggler gets clown of the week. You guys have been listening to the Trading Justice podcast presented by Tackle Trading. If you want to get in the game with Tackle. You can go test out the pro membership with the coupon code JUSTICE15. That's JUSTICE15. That'll give you 15 days free trial version, so you can check out all the scouting reports, the coaches' shows. And this is a great week to do it because this week we also have Cash Flow Club on Thursday night, where we're going to go over theta strategies there for the pro members. And we have a lot of other things coming down the pike for our pro members. So get over there to Tackle Trading, test it out, tell a friend about it. If you like the podcast, share it with a friend, put it over all over social media. You can find us at Trading Justice on Twitter. You can find us on the page Trading Justice on Facebook. And you can also go over to the clubhouse at Tackle Trading to join our community and start getting help from an amazing group of traders over there as well. So for episode, I believe we're on 208, right? 208. For episode 208 of the TJ podcast, we are out. Thank you so much for being the best part, being the listeners. Thanks, everybody.
Love yours.